Good day, everyone. This is Patrick from EasyFX Code Trading System, and this is Saturday, the 15th of April, 2023, and this is the weekly technical analysis for the Euro, the Cable, and the Aussie dollar for the third week of April. And as we look across these three majors, the Euro has formed a recent new high, similar to the Cable, while the Aussie dollar has been trying to recover from its recent lows. So it's still behind on in relation to the other major pairs. However, the for all these three pairs, the Friday, the end of the week, yesterday was bearish day, even though the US retail sales has been was weak, and but prior to that, the previous inflation news on CPI and PPI for the US was also weaker than expected, and that drove the recent drive to test the recent highs. And then a pullback on the Wednesday, even on the Friday, even though there's was weaker figures on the retail side, and this could be in relation to the stock market, as it was a risk off on the Friday as well, and it could be a rally to the safe haven for the US dollar. So even in spite of recent good news on the inflation side and potential pause in the Fed interest rate hike soon, but the Friday is a key indicator for perhaps what's going to happen in the next couple of weeks before the next FOMC meeting. Okay, so let's review what happened last week with the inflation figures and look forward for the next week news. Well, last week, the US CPI was lower than expected at 5% and just slightly lower, but it was forecast was already lower for from the previous month, so it's been dipping lower from the high of just over 9%, and it's been declining since then, since the fourth quarter of last year, and from 7 down to 6 and then down to 5%. So that's good news on the inflation front, except that perhaps energy may increase the following month with the OPEC news on reduced production, reduced output, so that could drive prices back up again. But this was indeed good news for on the inflation side, and but the Fed is still trying to target the 2%. So although it's been declining, it's a short-term rally to push the US dollar lower, and the majors climbing up, including spot gold. And it was supported the following day with the much lower than expected wholesale prices on the producer price index side. So also lower than expected, in fact, below zero. So this helped the to weaken the US dollar further. Then there was also the release of the FOMC meeting minutes, and they did discuss a potential mild recession in the economy, and this was highlighted with the lower than expected US retail sales on Friday. So even though it was lower, the US dollar should continue to weaken, but overall, after the caution from the Fed, the stock market has been cautious and was not able to climb up higher, so it was slightly risk off. and then possible flight to safety with the US dollar on the Friday. That could have helped drive the recovery of or a slight bounce in the US dollar on Friday. So let's see whether that's going to continue this week. And this coming week, there's flash PMIs for all the economies on Friday. Prior to that, there's the RBA release of their meeting minutes on Tuesday, where they did not increase rate as was expected. And then UK will be looking at some key indicators of their own when their jobs and CPI figures. Inflation is still running pretty high, close to 10%. And all the major economies will be reporting their flash manufacturing and services PMIs on Friday. And we'll see whether it will come in lower and forecast to see whether there's any further impact on the economies. All right, so let's take a look at the charts and for both the major pairs as well as the US dollar index. Let's start with the euro dollar. And Wednesday and Thursday with the lower than expected CPI and PPI figures. This helped the euro to rally past the 110 figure and hit a recent high now of over 110.70. And Friday with the even with the weaker US retail sales figures, it pulled back and could be the start of a retracement lower. We'll see how much of a retracement that's going to be after progressively pushing up higher to test this recent high from the start of February. And momentum could be waning, as could be a divergence forming now. So let's see how much of a retracement it's going to be for this week. And let's, I think we could also move the bit now to start looking at a potential retracement. So the first area support will be at 21 Fib, but this will be the next key support at the 38 Fib retracement. And for now, let's move the resistance up here at this high that was at 110.76. And interim support here at the 38 Fib retracement. This could now move up to this area of previous swing high here. There was a zone of resistance before, which was broken. Now it could return to that area, and that's at the let's go back to the weekly, and we'll see it was all the way back from this swing low from 2020, and that's at 107.67. Okay. Let's take a look on the weekly time frame. And yes, it did pause just shy of the weekly 200 EMA. And although it was a bullish close, it could be a consolidation within the range of last week. And let's see whether it's going to test the extreme ranges before settling. And it's also going to be exposed to the flash PMIs on Friday for both the Eurozone and the US. Okay. And if it does break through the 38 FIB, there is still the 50 FIB retracement just at 108, just near the 108. Now, perhaps I could move this to the 108 area. Okay, to show the confluence here at the 50 FIB. Okay. So let's compare this with the US dollar index and to see how it's inversely correlated. Here's the US dollar index, the DXY, and it is almost a mirror image of the euro in an inverse fashion, where tested the resistance zone on the Monday before starting to reverse and drop below the 101 support level to test the recent lows, also the recent highs for the euro, a recent low for the US dollar index, and managed to bounce back up on the Friday in an engulfing candle. So this could provide some impetus for a stronger recovery from this potential double bottom. And we'll see if it's able to climb back up to the 102. And then back up to the 62 FIB, which likely will be the 38 FIB retracement from this low, and test that resistance zone again. So that was the Wednesday and Thursday, where the CPI and PPI data just weakened the US dollar until the retail sales figure yesterday. And on the weekly time frame, it's spinning top, so it's going to be consolidation for next week until it's clear whether the recovery is on the way. Right, so this is still going to be a resistance zone up here. Key support is now back down at the swing low. It's around the 150. The resistance is still at the 103. We could also just add in the 102 as an interim resistance, and as well as the interim resistance at the 62 FIB of this pullback higher. But for now, let's leave the FIB as it is. So this zone between 102 and the 102.40 is going to be a strong resistance zone. And since it's only a slight move out, it's pretty close still. Could leave this here just to, since we did move the fib for the euro, so correlate this as well. Resistance zone is still a strong one at the 50 fib as well. And this will be the 38 fib, so let's just move this over. Uh, 102, I think I might leave it out. And leave this at the fib levels at the 21 fib retracement. All right. So let's see whether it can clear these fib levels and the key interim resistance levels. Let's see how strong this resistance, this retracement is going to be, and whether it's just going to consolidate instead for the week. Okay, let's move back to the other major pairs. Let's move on to the cable, where Friday retracement is very significant, as it did retrace back past the previous 2 days of gains from the start of the lower CPI figure from the US, and hit a high of almost 125.50 past this recent high of January. So we'll see if this is going to be a significant double top area. And likewise with the euro, we could move this bit back up here. So that was the high at the 125.47. And that's going to be the significant resistance. Key support is going to be at the there's a 123 level here, along with this previous swing high, and just near the 38 fib retracement. So this zone is going to be a key intermediate support zone, with the next major support at the 50 fib, where the 200 EMA is climbing up to. And this week is quite a critical week for the UK, with jobs and CPI figures coming up, as well as their own flash PMIs. On the weekly time frame, it's a doji here, and that could be a potential reversal here, or at least a significant retracement. So let's see how much it's going to retrace back to the 38 or the 50 fib retracement area. Right, so a critical one for the UK this week, especially their CPI data. and it has made a significant rally back up. So all the way from the 118 area and climbing over 700 pips. Okay, so let's move on to the Aussie dollar. And with the lower inflation figures from the US, this helped the Aussie dollar to recover more from this critical support zone, and was not able to break through the 68 round figure, and there's a daily 200 EMA there as well. There's a significant resistance zone, and retrace as with the other major pairs on Friday. So this is still consolidating in a range here. And we should be able to, let's update this fib as well and move the let's move this swing low here. All right. So it has retraced back up to the 38 fib. Oh, so sorry, that was the correct area here. So that's the 38 fib retracement, and then pull back down to the 21 fib. So that's the two fibs that is ranging between, and let's mark the 50 fib here as well, which aligns with this area. And this is going to be a critical interim support now. If that's broken, that's going to drop to the 66 round figure, which it has not reached recently. And this week it needs to, it is exposed to the RBA meeting minutes. And the Australian PMIs are not that critical, but the RBA minutes will be a key indicator for them, as the RBA decided not to raise rates the last round. So we'll get some insights from there. Let's take a look on the weekly time frame. And it's still closed bullish for the week, but let's see what consolidation there's going to be for next week. All right, so do check out my other videos on spot gold and dollar yen, and have a safe week and a good trading week, and cheers for now.